Is U.S. tax policy prompting the recent spate of M&A activity? A former Council of Economic Advisors that we had on yesterday, Director Austan Goolsbee, addressed this issue on Squawk Box.
That we have not sorted out our complicated and deeply messed up corporate tax system in the U.S., which really we could do on a bipartisan basis. You've got people in both parties saying we should fix it. Yeah. It's a motivator just itself to have transactions, even if they didn't make economic sense, just because they can use this, the difference of this tax wedge. It gives an incentive for foreign purchases of U.S. companies and then flip where the headquarters is.
And joining us now to talk about this and what we can do to fix it, or whether it really is a negative, I'll tell you what I mean in a second, is David Walker. He's a former U.S. Comptroller General and a former CEO of the Comeback America Initiative. And still with us, our guest host, Rob Cox, global editor and co-founder of Reuters Breaking News. And Dave Walker is also the only guy that you should even think about for Connecticut Lieutenant Governor. And if you're opposing people one equal time, there's more than one of them, aren't they? Call us. We'll on, but until then, we're going to have you on, and I'll say I'll give you my endorsement anyway. Thank you for coming.
Very much, Joe.
You're very welcome, Lieutenant Governor, pre-Lieutenant Governor David Walker. I'll tell you why I was saying it that way. We're so hard up for animal spirits and M&A activity and getting back to this country where these exciting things are happening in the private sector, that I'll take anything that causes M&A activity. I was just glad to see it. So if it's a bad corporate tax system, are we sure it's bad if at least it's getting some companies to think about how to do better?
I'm all for entrepreneurship. I'm all for innovation. That's one of the things that made America great, if you will. But there's absolutely no question that our current tax system, and it's not just corporate, it's individual, is overly complex. It's subject to abuse. And it is not competitive. We have, on the corporate side, we have the highest marginal tax rate of any major industrialized nation. Obviously, there are a lot of tax preferences, deductions, exemptions, exclusions that cause the effective tax rate to be lower. There's no question that we need to broaden the base, lower the top marginal rate. We also need to recognize the reality we're not an island. We need to deal with the situation we have right now where people don't want to repatriate their profits to be able to pay the incremental taxation. There's billions of dollars being held offshore that could be come back and put to productive use. So broaden the base, lower the rate, go towards territorial taxation rather than global taxation.
Goolsbee yesterday said there's trillions on balance sheets right now before we repatriate, and it's not being used. So why let them bring back?
Well, and I'm glad you said that, because it is trillions. It's not billions. It's trillions. We got to add 3 more zeros there. Okay, look. What we need to recognize is that some people talk about the fact, let's have a special temporary tax preference period to bring the money back at a lower rate. If you're going to do that, you want to do it based upon a condition that it's going to be invested for growth and job creation. But that's really the short term. We need to engage in this comprehensive tax reform to address the disease, not just the symptom.